Hi, you're watching Russell Market Week in Review for the week ending February 27th, 2015. We're coming to you today from Russell's world headquarters here in Seattle, Washington. I'm Mark Soupiset, and I'm joined this week again by Erik Ristuben, our Chief Investment Strategist. Erik, good morning.
Morning, Mark.
All right, I wanted to start where we spent a lot of time last week over in Europe. We saw European finance ministers give Greek the time that we talked about that they were going to need an extension on their bailout program. Talk about that. Was it what the markets were expecting?
Well, yeah, we talked about the fact that what they really need is time, not necessarily money. Was it what the market was expecting? It was certainly what we were expecting. Okay. I think we told you that we were pretty confident a deal was going to get done because it wasn't in the best interest of either party to have a deal not get done.
All right.
Maybe the surprising part is they didn't actually go down to the very deadline. They actually got it done a little bit earlier than I think, well, certainly we expected, I think, than the market expected. Yes, I think it is what the market generally expected. It's yet another kind of concern that has been at least taken off the table for a little while. I mean, it'll continue to be.
Well, I was going to say 4 months, is that a meaningful amount of time to get something done?
No, well, yeah, I mean, they can get something done, but even if they get something done that's permanent, I still think that episodically every couple of years you're going to have this tension.
Sure.
So I don't think this issue is going away anytime soon. It's just getting farther and farther into the background. And moving to the foreground is the fact that, you know, the stock 600 index is up about 2.3% this week. That's on the basis of, you know, the deal,
right,
but also on the fact that, you know, some economic numbers continue to be looking like they're strengthening in Europe. We're getting also closer to QE.
Sure.
Right? So probably one of the most notable things that we saw this week is that the German Bund yields on the 2, the 5, and yesterday the 7 are negative.
All right.
And so you got negative yields on German bonds. You know, that in our minds is yet another reason of a long list of reasons to buy European stocks.
All right, good stuff. We'll keep an eye on Europe as we do each week then going forward. So you mentioned economic indicators. Let's look at U.S. economic indicators. We had a fourth quarter GDP number that we got, I believe today, 2.2%. Right. Talk about that with the backdrop of some mixed economic news that we're getting here in the U.S. this week.
Yeah, it's the first revision, right?
Yeah.
We saw the first number last month at 2.6. This one's 2.2. Nothing really massively changed. The main thing that changed in lowering the number was inventory build was a little bit less. That is actually not necessarily always a negative.
Yeah.
But the real reason that the economic number of was lower at 2.2 now than it was in third quarter at 5. The real big reason, the overwhelming reason, is the federal government, which we say, and that was reconfirmed. The other thing that's obviously happening in that number is that because of the stronger dollar, our exports were down. A stronger dollar, our imports were up, and that was a headwind. But in general terms, we think the economy is kind of cranking out numbers in line with that 3% expected growth for 2015. You know, and we've had some congressional testimony by the chairman of the Fed this week. I think that she was on balance, probably erring to the dovish side, and really trying to communicate to folks that although they don't see inflationary pressures now, as they've been saying countless times and continue to say and will say, is they're focused on labor, they're focused on inflation caused by wage pressure, but I think the market is beginning to kind of move the date out as to when the Fed is likely to kind of begin to raise rates. We still think it's in the third quarter, but it's obvious that the Federal Reserve is very aware that the inflationary environment is actually quite sanguine.
So what we got from Yellen this week, in your view, really wasn't anything new. Markets feel like we're still on course for what we've been expecting.
Right, and the market this week is flat.
Yeah.
The Russell 1000 is flat this week.
All right, Erik, as always, appreciate your time.
You bet.
Thank you so much for being with us today, and thank you for joining us for Russell Market Week in Review. We'll see you next week.